what a great indeed transition, no, from the previous conversation to what is really going to happen between signing and opening. And I hope everyone had their caffeine intake post-lunch, so I'm just going to see if it's really working. So I have a quick question to the audience. How many of you know a hotel project that was signed but never got opened? Wow, I see a few hands over there. Well, in reality, as Trevor has mentioned, over the past 5 years, only 9% of hotel projects in Africa actually successfully transitioned from signing to opening. And that obviously opens a discussion on a reality check. So what is really happening? So signing a deal is just the beginning. What really matters is the execution that would make it or break it, the project. So today we'll focus on what is arguably the most important phase of development, the journey from signing to opening, and the factors that ultimately determine whatever the project succeeds. In that, I'm just going to bring a very broad question to all of you, and Daniel, perhaps you can take this one on. If we had to define one metric that truly matters between signing and opening, what would it be and why?
Okay, yeah. Good afternoon, everyone. My name's Dan. I'm heading up development for Radisson, for Southern and Eastern Africa, representing the team for the continent today. It's been an interesting journey for me, almost 6 years with Radisson in terms of this question. What would be the most relevant metric from signing to opening a hotel would certainly be the due diligence that needs to take place before signing, which can become undone between signing and opening. You know, from our side, over the last 12 months, we've managed to sign 15 management agreements on the continent, which is 2,500 rooms. And now the challenge really is to make sure that these are opened within their respective cities, within their respective countries, with their respective challenges, of course. Historically, over the last 5 years, we've been quite strong with our openings. We've generally been at least number 3 in the W Hospitality opening report that Trevor's been publishing for many years. And over the last 5 years, we have managed to open 3,000 rooms on the continent. Okay, our focus remains the hot markets at the moment, of course, Morocco, Nigeria, Kenya, and South Africa, where we hope to double our portfolio by 2030. And we have an annual objective to enter new markets as well. So, for example, over the last 12 months, we've successfully entered into the markets of Tanzania, DRC, which, as you noticed from the previous presentation, has become quite a hot market, as well as Zimbabwe, which has also been quite interesting for us lately. So based on this strategy, we have the largest presence in terms of open hotels that are under management as we manage it over 30 countries in Africa.
Great. Well, thank you so much for the response, and congrats on 15 signing. That's impressive. Clemence, what's your thoughts on this? One metric.
I think for me, the alignment of expectations on the project objectives and the feasibility.
Yeah, there's a lot of things that have been lost in transition. No? Fiona, what's your experience from the owner and ex-consultant?
Sure, yeah, just a little bit of an introduction. My name is Fiona Craw. I'm VP for Development at Westmont Hospitality Group. I recently joined, so about 2 months ago, and before that I was previously at JLL for 9 years. So I think I'll speak a little bit more on the consulting angle on this one. But I think the key thing between signing and opening is financing. I think the majority of deals that we see fall through is because financing is not in place from the onset. Signing a deal is relatively easy, but it doesn't actually become a development until your full capital stack is in place.
Yeah, right. I mean, we have a really full house today, no, with operators, consultant, owners, developers, really closing that hospitality real estate cycle. So, which makes our discussion, I think, particularly interesting because we are discussing same challenge, but through different perspective. So let me take it and like a step further. From your experience, what's the biggest gap between what is assumed at the signing and what actually happens during the development? And Clemence, I'll start with you this time.
I see the biggest gap I often come across is the cost of development. It often differs from what is initially planned.
Yeah. I think, I mean, there's something that our clients a lot are concerned is the development cost, right? They keep constantly asking us, what is the average price per key for different brands? And usually what operators are answering that we cannot say this, right? Because it's really developed on the project itself.
I often see the OS and the IT equipment is often.
And Daniel, what's your view being one of the largest operators in Africa?
Yeah, so we call this materialization risk. This is the risk of a hotel not opening once it's signed, okay? And in terms of materialization, what are the main ingredients that are required? I've already mentioned the due diligence that needs to take place. This is the due diligence done both by the owner and by the operator. So as an operator, we need to do our due diligence on who is the owner, who is behind the owner, who is doing the funding, who owns the land. And the owner, of course, is able to do their due diligence on us. We then need to do the due diligence on funding. We need to have the correct funding structure in place, right? But basically what it boils down to is having the correct partner, a partner that has experience operating in the African environment, that's done it before countless times. So that's what you need. You need the right partner. So at Radisson, and of course some of our competitors as well, we like to think of ourselves as kind of a one-stop shop. If you are a new owner and you have not done this before, you want to diversify within the hospitality industry, the management company offers you not just the design and ultimately the management services, but also enlightening you as to who are the correct people to work with when it comes to employing the professional team. Has a feasibility study been done? Do you understand the market, etc.? Do you have any relationships with banks yet? Would you like some, etc.? So you need to offer a kind of one-stop shop solution to owners looking to get into the market for the first time.
Yeah, excellent. Fiona, what's your thoughts?
Yeah, I mean, I think, again, it comes back to financing, right? So I think the assumption is when you're developing a hotel, you've signed with a brand, it will be easy to secure financing. But in reality, that's not at all the case. It's probably the most complex and time-consuming part of the development is getting that right. And that's all the way from, back to your point on development costs, I think a lot of times what's overlooked is pre-opening. So you'll have your costs in place for the actual construction, but then you miss out on the pre-opening. So we've come across a number of projects that have gotten to the stage of the asset is fully built, but there's a lack of funding for the pre-opening phase. And that can stall a project for, a considerable amount of time.
Correct.
So I think you really have to look at it from inception when you're signing all the way up until opening.
Of course. And I mean, Fiona, you have also mentioned feasibility, and from the owner and ex-consultant perspective.
Yeah.
How often do projects stall because the feasibility post-signing don't necessarily add up? And what do you think the developers should do in order to kind of stress test feasibilities?
Yeah, I mean, I think it's more often than not. I think to your point, if only 9% of hotels actually open, I think that's a good indication of the majority have an issue. So in my previous role, a lot of feasibilities were done or requested by the brands to see if the project is viable. Construction can take several years. In that time, markets shift, development costs rise, interest rates change. So what you had in place at that time may no longer be the reality. Correct. So I think from a consultant's perspective, but also a developer or an owner, you need to be updating that feasibility study throughout the construction period. Yeah. Because what was viable 4 or 5 years ago may not be viable today. So I think that's quite critical in ensuring you have a proper development and viable development in place.
Is there a lucky number, like once a year or during the geopolitical or economic shifts? Is there some sort of, I don't know, metrics?
I mean, I would say at least on an annual basis, if your development is taking 4 or 5 years, a lot happens in that time. So I would definitely say on an annual basis, but if there is a big political situation changing or anything along those lines, then it would be prudent to relook at your feasibility, at your numbers. Maybe it's a repositioning of the asset, relooking at your financing, just to ensure that when you actually come to opening, your project is still viable.
Yeah, great. Well, I mean, especially construction costs, like I want to be specific on that, like they change in like yearly basis, and there's so many things that impact that. I want to take maybe a little bit of a change in what we'll be asking for. The next question is related to, just checking on my notes. So in terms of the questions to operators, now, Clemence, Rotana's one of the strategies is to increase its footprint in Africa. From operators' perspective, how much control do you really have post-signing and to ensure the property actually reaches opening?
So we don't really have a control on the development of the project itself, but we have influence. We guide and advise the owners, as Daniel said earlier. We really try to support and guide the owners, being his first time or an experienced owner, and we also guide the consultant. So in terms of control on the development itself, to be honest, we're a bit limited, but we have influence. And what we do to really, again, try to support, and we all have a common goal in here, we all want to open successfully, is we meet regularly with all the consultants and all the parties involved, and we really proactively try to flag the red flags, identify potential gaps, and really proactively, identify any loopholes.
So sometimes it would be maybe like taking the owner by the hand and walking them through the garden in a way, no? Just to make sure that everything is aligned, because obviously you have so much expertise in that, potentially even less than some of the developers and owners. Daniel, what?
Yeah. I mean, similar, just to relay a bit more what Clemence has said. In terms of who the parties are in these agreements, there's the operator and there's the owner. And Radisson Hotel Group, as the operator, has very little control over obligations that the owner is responsible for in this arrangement. So we have very little control over the owner's funding, over the owner's ownership of the land, over the owner's build time, of the owner's ability to deliver capex, or day-to-day occurrences on site in terms of construction timing and procurement. And especially, we don't have control over the owner's liquidity during the construction period, all right? But we do have what you ask for as kind of red flags. So if we can see these red flags popping up a bit early, then we can try to help. So what are our red flags? Our red flags would be financial fragility. Okay, if the owner is trying to raise additional equity during the build period or sell hotel units to raise more equity during the build period, or has unrealistic IRRs, or, for example, is an inexperienced developer at the start to show. They put unrealistic timelines in place. They have requests to value engineer the product early on. They try to misalign the branding during the construction phase. So I've had an example recently where the owner wanted to change the brand from a 4-star to a 3-star product during the construction period. This is a sign that they have insufficient capital to complete the development. In their mind, the 3-star product would cost less. You start speaking to them. Unfortunately, also, they want to reduce the room count by 50% because they don't have the budget. So this is called a red flag. Right? How do we try to prevent these red flags from happening? We can try to leverage the control that we do have in line with our agreements, which is what? Number one, we can provide design guidance, design guidelines. We have strong governance during the pre-opening period, and both parties have got contractual protections to try and push the projects forward. So this is my response.
Excellent, thank you so much. I mean, just talking about this signing a deal, where various operators have their own quota to sign, and there's obviously a lot of things that are happening in between. And I would like to take a step back to the very beginning, even before the signing. What internal checks and balances do you have in place to ensure that a project is actually deliverable and will reach opening? And the question is related to, basically, sometimes operators can be very opportunistic and would like to sign a deal, but what are really the checks and balances? And Clemence?
Yeah. As a smaller organization and privately owned, as you correctly said, we have the luxury not to be after the quantity and sign. We're mostly looking at, can we partner on a long-term basis with the owners? And we do, obviously, the due diligence that Daniel correctly touched base on, the diligence on the project feasibility, viability. We look at, who are the consultants involved. We look at the funds. We really want to make sure that the owner will have the possibility to complete the project. We also look at the experience of the owner, and occasionally we will also look with other operators if they worked with other operators.
It's a track record.
Exactly.
Yeah. Is there any specific metrics that you look at the owner, like that you've mentioned, obviously track record? Is there anything else that is kind of like a pain point for you, and this is kind of one of the decision makers?
It's important for me to see if this owner is ready to fully trust us. I think trust, communication is quite important, and I understand that it could be difficult to really give the full responsibility of an entire hotel to an organization, especially when it's your first time.
Absolutely.
So for me, really, trust is extremely important.
Yeah, that's trust and care for sure. Daniel, what's from Radisson perspective?
Yeah, so checks and balances, we have a very, let me put it this way. Radisson Hotel Group during COVID was sold as a company to Xinjiang International, which is the largest Chinese state-owned hospitality conglomerate owned by the Chinese government. So I work for the Chinese government, which is important because I know I do. I think a lot of people work for the Chinese government, they don't even know. But, this is important. I can say, that's me, I work for the Chinese government. I tell my children this is where the money comes from, they pay the school fees. That's how it works. So the Chinese government likes a very kind of tight control over how decisions are made, as you may or may not imagine. I have to imagine it because I've never been to China. But what I don't have to imagine is that every month we have to submit a board paper. And in this board paper, which is checked by the Chinese government every month, in this board paper we have to present every project that we're looking at, okay? And this is quite a big deal. You know, we have a team that is dedicated to preparing these board papers. We have a look at the market, we have a look at the owner, we have a look at the land, we look at the financial projections, what our fees will be, what have the architects done, what is the interior designer going to do they have a project manager, which banks are involved, etc., etc. These are all very important checks and balances, and we need to present a coherent report to the Chinese government each month. Via subsidiaries, of course. I don't speak to the Chinese government directly. Yeah. But it's very thorough, and yeah.
Yeah, Daniel, it's time for the business trip to China. Come on, what is going on here? You should ask Radisson. But and how often do those kind of proposals being rejected? Is that a common practice? Is it 1%? Or?
Yeah, they're not often rejected. They often are sent back for us to what we call a red line to any document. You know, please do more due diligence on the owner. We're not sure about the situation about the land. Please double check. Why is there only leasehold in this part of Africa, etc. We're worried about the fees. This is a new market entry for us. We have new fee hurdles. Have you checked that those are being hit, etc.
Yeah.
They don't often get rejected. You know, we wouldn't really start working on them if we thought they would get rejected, because we know where we want to be present, and we know what type of owners work, and usually once you know those within what we call rules of engagement, there's an unlikely chance that eventually it will be rejected, but potentially postponed in terms of our internal due diligence. Yeah.
That makes sense. I mean, we've discussed the challenges, the risk, and what can go wrong, and a lot of things can go wrong. But let me take it back to the core of our discussion. Obviously, the developers want to open the hotel as soon as possible, right? To obviously have back their return on investment. So in the race to open, there is always a trade-off between speed and quality. What is the one factor ultimately determines whether a project actually opens on time? Fiona, I'll start with you.
Not to be repetitive, but I think it still comes down to the financing. And I really don't think there needs to be a trade-off between speed and quality. I think if you have your capital stack in order, you can achieve both. Everything will be lined up, and you will be able to open on time, deliver your project on time, and it will be the quality that's required.
Financing, yeah,
yes.
Makes sense. Okay. Daniel, what about you? What do you think?
So I mean, we have a special pre-opening team, which we call a future openings team, that comes on board, let's say 9 months prior to opening. The GM gets onboarded, the HODs get onboarded. The owner needs to open bank accounts. There's various licenses that need to be. So all of these small details need to happen. And for us, we're happy to delay. We'd rather open with the product that we intended to open with. So we're in no rush. We want to open properly. with the product that we intended to open. So we always go for quality and delay.
Excellent. Clemence?
Alignment and objectives, communication, and overall protecting the guest experience.
Yeah, thank you. I think what's clear from this discussion, obviously, that signing a deal is just the starting point, right? There's so many nuances that is in that the whole development phase. And the real success is probably what you guys have mentioned, right? Execution, alignment, planning. And perhaps one of the key takeaways, it's not just opening the hotel, it's opening the right project at the right time and the right way. And with that, I would like to thank you for your insights and thank you, audience, for being with us today.
Thank you.
We did have a quick time for like one quick question, if you want one. Because you finished on time. Well done. Do we have a burning question? Do we have a burning... There we go. We'll take it quickly.
Do it together. All right.
Hi, thank you very much. My name is Hasnain Noorani, and I'm the Group Managing Director for the Pride in Hotels, Resorts and Camps. This was a very interesting conversation, and thank you for the insights. I was just wondering, let's see if you have signed up with the hotel, and like Daniel, you said that in the event, let's say the owner has run out of funds, and maybe he wants to, he wants to get the rooms to 50% of the inventory of what you had initially proposed. Or let's say he wants to take it down from 4-star to 3-star, or maybe from 5-star to 4-star. How do you go about it at that point in time, knowing that the owner has run out of funds? Would you still continue going ahead with the project, or would you stop it there?
Yeah, good.
Yes,
Yeah,
Daniel.
thank you. That's a good
want to take?
question. I mean, I think the obvious response is that it needs to be done on a case-by-case basis. Depends whether it's a first-time owner or an existing owner, depends on the location, etc. But I think what we do, certainly, and what most operators should do, is be disciplined in terms of walking away from a project. Okay, because you can incur brand damage by having it known in the market that a project is coming out and continuously delayed, and then you have the owner wanting to change the brand or reduce the room count. This can be damaging for the brand. So at first we try to help, etc. Of course, I stand by my one-stop shop comment earlier. Try to assist. Maybe some of our other owners can help with funding, or we can find other funding sources, or speak to the banks that they're working with. But ultimately, we will walk away from a project, and maybe it's more appropriate for a boutique hotel operator to take over the project at that point. If it's gone from 120 keys to 50 keys and they want to change the room size, we say, look, we don't have a brand that fits that, but there are plenty of local operators around who we could introduce you to. Yeah, so I think it's a dynamic question.
Take 2. A round of applause for our moderator and panelists. Thank you so much.